Hey traders, welcome back to another exciting and electrifying episode of Market on Mic. Or as you all know, this is actually the show where we break down the charts. It's not just about the noise or about flair of trading, but we actually get you quite confident about trading. So if you've been on the show for a while, you know that Market on Mic is not here to just make a lot of noise. We're here to break down the charts for you to fully understand and be confident about trading. As you all know, I am Daniel, and I have with me here my consistent co-host Natasha. Welcome, Natasha.
Hello, everyone, and welcome to another exciting episode of Market on Mic. And this is the first for the new month of July.
Happy new month, guys.
Yes. Happy new month, traders. Right?
Yes, I hope you're excited about the second half of the year. It's going to be buzzing. It's
Guys,
going to be amazing.
It's mid-year already, and this is a good time to take a break. Look at your portfolio, see what is going on, see what you can adjust, see what you can change, because we're about to hit the second half of 2025. I mean, it's not ready for us, right? It's not ready.
It's not. And that's why we are bringing to you basically what the market has been up to, maybe since the month of June and coming into July, what you should expect, economical data, what has been happening underneath, just to help you get prepared for the new month
of July, guys.
Exactly, for the new month of July. So we all know today, at the point of this time, we actually today's actually Wednesday, and the month has actually been great so far, right? It's just 2 days in, and the market is already absolutely buzzing. So we are seeing gold flexing like a champion. We are seeing the oil market quite holding its ground since after the sell-off sometimes last week. Then we're also seeing US dollar doing a bit of a wobble. It's quite unstable at the moment due to the trade tensions and also the Israel-Iran war that's been de-escalating. Also, we are seeing US job data that will be dropping tomorrow on Thursday, right? Which is quite weird. So the NFP is coming a day sooner than we expected. So buckle up, guys.
That's right, Daniel. Now, the U.S. Independence Day holiday, which is actually going to be on Friday, we already know that the 4th of July is Blue Friday. Because we're going to be seeing the U.S. celebrate another is it independence?
Yeah, Independence Day.
Were they ever colonized?
Let's not go into economy.
All right, okay.
Or history.
So on Friday, we're actually going to be seeing the U.S. Independence Day. And so the market is actually adjusting. And that means that the non-farm payroll, which is popularly known as the NFP, would be released on Thursday morning.
It's quite...
Instead of Friday. It was Friday afternoon.
Yes, it's Friday afternoon.
They just brought it to... So that tells us that, guys, from tomorrow, there's going to be a whole lot that is going to be happening. So traders, mark your calendars, adjust your schedules, and prep your trade.
Yes,
because the fireworks are starting a day early. So let's dive in, right? Let's look at the big pictures. Like we said, we're already in the middle of the year. And as a trader, or if you're even looking to becoming a trader, you know that you're not just jumping into the market just like that. You want to be able to, just like we say technicals, price actions. You want to be able to see what price have been able to do in the first half of the year, what has been consistent, what has changed, all of that. And we saw gold, it's currently hovering around $3,337 per ounce, right? And it's been holding up like a true safe haven superstar.
Gold has actually been holding up.
I have not seen any instrument so consistent with a trend that it's not even giving chance for major retracement. Right? And with the inflation still lurking in the background and global tension keeping risk appetite cautious, gold is absolutely soaking up all the spotlight. I mean, we already said it last week. Everyone is looking at gold. Everyone is trading gold. And everyone is enjoying the benefits coming from gold at the moment.
And I also saw a news pop up sometimes today. Like the gold getting to 4,000 is not a question of if.
Yeah,
but
it's
a
a
question
question
of
of
when.
when.
Exactly, a question of when.
Yes.
So you guys should buckle up. It looks like the second half of the year is going to be quite exciting for gold.
Yeah, so if you did not catch gold when it was moving up in November, you didn't catch gold when it was moving up in January, you didn't catch gold when it was moving up last week, you can actually catch gold
Yeah, you
move
can
up
catch
in
gold move up in July.
right? Like we said, start prepping your trade, guys. So now let's move over to the energy market. We know the WTI oil has actually climbed back above $65 per barrel. I don't know how Donald Trump's mandate of keeping low, crashing
Keeping price of
of
oil low, exactly.
how long that is going to last, because as much as yes, he might actually have all of this influence, I mean, it's still oil.
Yes,
We have the world depending on oil. I don't think the world has been able to come up with something steady to build electricity as much as oil has actually done.
We're not just working towards that.
Yes, we're not just talking electricity, we're talking about movement, we're talking about basically it affects everything. I mean, from transportation.
Exactly.
So definitely we've been seeing oil try to struggle its way back above $65 per barrel, and it's actually trading between 65.36, and we also see Brent. The Brent oil is also sitting somewhere around this. We know that it's actually tied to tighter than expected US inventories. You see a surprising 3.8 million plus barrels built up in the last EIA report. A significant miss versus the minus 2 million barrels consensus. So,
and it's crazy because we were seeing a lot of oil production, right? And when there's massive supply
of
like
course,
that,
the
definitely
oil is
you see
going
oil
to crash. Yeah,
crash,
we already know
exactly.
how it is, demand and supply. And oil is one instrument that, as much as we say, okay, probably the market respects demand and supply, oil is your go-to person. Like we said about that, it is one instrument that is always on the dance.
Yeah.
So plus some carefully worried outlook talk from the OPEC. OPEC has tried. I mean, they're doing their best to keep oil prices at a much more sustainable rate.
Yeah, true.
You know, however, with the war going on, the wars are going on, and you're fighting these wars with oil too. I mean, you have to power that thing. You have to power whatever weapon, irrespective. So yes, we are also seeing oil do some bit of move. So we might actually see a move to the upside, depending on.
Basically, because of the escalation of the war, definitely oil has been kind of a little cheeky, unstable for the last 1 week. Oil has just been ranging, and that has been because there's no clear direction to. We're not really hearing anything again in regards to the Israel-Iran war. So there has been a total de-escalation, and the market has just been
Total de-escalation.
Yeah,
or should we just brace up for impact?
Trump has been trying to calm the whole thing, right? But there hasn't been so much information like before when we were saying, okay, Iran attacked.
Yeah,
Israel
it actually just looks like the same thing that happened with Russia-Ukraine. At least this year, we came into the year, we're thinking probably that war is over, but we saw more tensions. And this was the war that started in 2022.
Yeah.
And we just saw more tensions coming up. So yes, guys, we already know that if you're trading oil, you are on a very, very volatile market, because you know that all of these things come into play.
Oil is also one of the top 5 instruments we spoke about in our last episode. So if you want to really trade on oil, you should actually go back and listen to our previous episode, right? Actually going to give you a good idea of how to approach the oil market. So you see, we are giving you guys top value here, right? So and also let me talk about the US dollar. So the US dollar is actually taking a much needed breather, right? Dollar has been quite unstable since the beginning of the year. If you look at your charts, you see that generally the dollar, the USD, has been very weak. If you look at Euro USD, you see a clear upward trend. Also, same as GBP USD. So we are seeing Euro USD testing the 1.1789 level. GBP USD also holding firm at 1.3625, which is actually a very, very key level. Then we are seeing the US economic data showing early signs of softening. All right, softening in terms of the inflation. We're seeing inflation cooling down. We're also seeing the NFP data. We're seeing it coming up. So all those softer data has been quite unclear, and traders are kind of scaling back with their aggressive dollar bet, and it's clearly showing in the chart, but quite unstable too.
I think any trader right now would know that we've probably seen this before. We saw Trump in 2017, and we saw the weakness of the dollar, and now the dollar is actually taking much more needed breather. But one thing I would always say is that I don't think you want to be caught on the opposite side when dollar begins to regain its strength.
No, you don't want to be in the opposite
You do not
side
want
at
to
all.
do that. So yes, you want to take your sells, your short sells, your long sells. I mean, of course, it's on a downtrend. Enjoy. Always remember that this is Trump we're dealing with. So guys, moving to the indices market. The indices are presently a mixed picture, especially of this morning, and signaling a potential sector rotation. So the S&P 500 is holding cautiously green, up about 0.3%, and even flirting with new all-time highs around 6219. And that's very impressive.
Yeah, true.
That's very impressive. And the tech-heavy NASDAQ 100, which reflects the largest non-financial companies on the NASDAQ, is currently trading around 22,627, showing about 0.66 potential gain today after yesterday's 0.8% tumble from the broader NASDAQ composite. And this actually indicates a selective bounce within the tech sector. Meanwhile, we also see the US 30, which is the Dow Jones, the industrial average is showing relative strength, currently up about 0.1%, lifted by gains in more defense sectors like healthcare and industrial, as investors potentially rotate out of high growth tech after its strong one. So all what this is saying, all of this English, is that the stocks are looking good.
Yeah, they're looking very, very
They are
bullish.
looking very bullish,
so-
and you want to actually, like I said, prepare yourself, because like Daniel earlier said, we're going to be having the non-farm payroll on Thursday, and that is going to either help us continue trends or interrupt the market for a bit. But guys, stocks are looking good, and like we said earlier, I think on a couple of our episodes, guys, the world is not stopping AI now, right?
Not at all.
I mean, we're only just even beginning, and you can see that it is going just past your mobile phones. We're talking healthcare, we're talking industries. There's so much AI is still about to do. You want to prep well for your indices as well.
Yeah, so we've seen both US 100 and US 500 actually, they got to their all-time highs. That was sometimes late last week. That was the ending of the month, which shows a whole lot of, and that was actually fueled by the strong AI rally. We are seeing a lot of innovations in the tech industry and also in energy and transportation sector, also healthcare. We are seeing a lot of tech innovations that is actually moving the market, especially the Dow Jones. Crazy stuff happening in that market. The market is very strong at the moment. All right, so those are actually the thing, what has been happening and what is presently happening as of now, and which I believe should give us a highlight of how we should approach the remaining weeks of the month, especially after the NFP is being released. The data is being released on Thursday. All right, so what are the key data to watch for this month? Now, here is the real fuel behind this week's market tension. All right, so first thing is the ADP private payroll report, which actually came out on Wednesday, right? And it overwhelmed the whole market, right? We're seeing that there was a projection of that ADP private payroll reports actually getting to 99,000, right? That means the private sectors, jobs that were added in the private sectors should be about 99,000. That was a forecast, but it was released and it came out 33,000, which was quite poor. And that was the first monthly drop in over 2 years. Over 2 years, that's quite a long time. And it was quite massive against the 99+%. Now, ADP isn't always a perfect mirror of NFP. That's the ADP is not actually a perfect mirror of NFP. Exactly,
Yes,
but it
obviously
actually
not.
sets the tone, right? One way or the other.
Okay, you can actually say that. But just like you said, I don't see it to be, but of course, it sets the tone.
Yeah, right now, the tone is more likely to be shaky due to that particular report.
I think that at least, from NFP tomorrow, that would also give us an insight to see if the US would bulge in probably cutting interest rates, because I saw a news that said, okay, they might actually look at cutting interest rates 3 times before the year ends.
Well,
but that's not how
happen.
It doesn't sound like poor at all. But of course, you just never say never in the market.
All right, so that actually brings us to the main event of the week, and literally probably of the month, right? So we are having the NFP data. If you're actually listening for
payroll,
so if you're listening for the first time and you don't know what the NFP is, then NFP is just basically employment or job data that has been added for the previous month. Those data has been
minus
the farm,
excluding the farming industry.
Exactly, excluding the farming industry. So those reports in terms of jobs that were added and also employment rates, those are the data that has been released on the first Friday of a new month, showing the data of the previous month. Right, so that's what NFP actually means, and that data is going to be released on Thursday. And the reason for that is because of the Independence Day on Friday in the US. So it was moved a day ahead.
So don't forget, you can actually see this on the Forex Factory.
Yes, you can check the Forex Factory.
So it's not probably maybe we have been sent emails that these things are coming up. So if probably you're wondering, how do you even know what's going on in the US, please, you can check your Forex Factory. Now, thank you for that, Daniel. Now let's zoom a little bit into the chart and actually talk crucial levels. Because in this kind of volatile environment, precision is everything. We already know that two things would make or mar you in this market. That is your entry point and your exit point.
Exactly.
Yes, you have to know when to go in and also when to stop. Now, let's talk about gold. So we're actually seeing robust support around 3,300. That is, if the bulls manage a clean, decisive break above 3,365, we could be looking at a significant new leg higher. That is, keep your eyes peeled on that level.
Exactly. So if you see gold breaking above $3,365 per ounce, we could most likely see gold heading back to 3.5. And once it clears 3.5, trust me, we're going to 4,000.
Exactly.
So the key level you should be looking out for gold is about $3,365.
So one tip, moves past there, guys, prep yourself. And then, like we said about oil is around 64 to 67 zone. That's the 64 to $67 zone, and this is where the real battle is unfolding right now. If momentums hold, we might see a breakout towards 70, but do expect intraday pullbacks. We already know how it can be, especially on weaker volumes.
The oil market, especially with the war going on, which is there's no clear direction. And if you look at the oil market, it's literally showing a direct picture or reflection of what is happening during the war. Now, the war has been a little bit silent. We're not hearing anything, and the oil markets just went silent. All right. So, but if we see maybe the war coming back up and there's a breakout towards the 70 level, then we could see further upside. Maybe the market gets into $75, $77 per barrel, right? So, but like Natasha rightly said, expect intraday pullbacks in case then there's no volume or momentum that comes into that market.
True. And then looking at the currencies market, first the Euro USD. Now, we already see that this pair is fleeting with 1.1789, and a decisive push above that could clear the way for 1.18, especially if Thursday's data deliver a stronger dollar negative surprise.
All right, if the NFP comes out negative, if it comes out negative, it's actually going to be a big shock, and that will be the first time.
Why would it be a big shock?
That will be the first time in 2 or 3 months. The data has been coming out good back to back to back. The market responds to surprises, Natasha. So if the markets or the NFP data surprises us, the market will surely respond.
Well, that for me is actually not a surprise, because this is the US we're talking about. I do not want to judge, but I've seen them actually having to change data. I'm not judging, but yes. So guys, that's why it's fundamentals, right? It's not predictable. You don't know. But we're still going to see it play out. But for me, it's not going to be a big surprise. It
could be a surprise for traders, actually.
Get ready to be surprised, guys.
All right.
So now moving to our equities, that is from the S&P 500, we have watched for continuous support. I will not lie, I'm on a trade and I want it to push. So we're actually going to watch for continuous support around the 618 to 62 region, and a sustained break above its recent high of 622 could confirm bullish momentum. I cannot wait for it to break. I am waiting. I am begging it to break. So for the NASDAQ 100, guys, we see strong support at 22,400. That's near yesterday's close, and we also have a resistance around its today high of 22,635. Now, the divergence between the Dow Jones and NASDAQ suggests traders are carefully picking their spot. Like I said, two things that can help you or help make or mar you in this market is both your entry and exit points. Yes. So right now, like I said, it's actually traders are carefully picking their spots. It's favoring value over high growth in the immediate term.
Yeah, and like for example, yesterday we saw a big rally on the Dow Jones, about 0.1%, and the NASDAQ actually closed negative, right? We actually shows that investors are looking towards the healthcare industrial market rather than the high growth stocks like the tech stocks and the likes. So they are favoring value more than those high growth like tech industries and the likes.
Yes,
right?
Guys. So of course the USD JPY, yes, so it's been sitting firmly in consolidation. That it's been on on a price level for a while, and it's been between the 158 to 158.80. Now, not much is happening here unless we get a major surprise surge from the US job or a significant shift in inflation settlement.
Yeah, so USD and JPY, they haven't been so strong. Although JPY picking some level of momentum lately. If you look at USD JPY, generally for days the market has been on a downtrend, right? So which has also reflected dollar weakness, right? So most likely, like you rightly said, if there's a surprise in the market, then most likely we're going to see this market plunging further down or shooting up if whatever surprise or whatever way the surprise comes.
Okay.
All right.
Yeah. So in case probably you're wondering, what are these people talking about? I'm going to put this in the simplest terms possible. That is, if you're trading gold, yes, we're still looking for more buys, but you want to make sure that it's able to break above a particular support. Right, so if you go to your charts, just look for your 3,300 level. You'd see that gold has been, supported by that area. So you just want to make sure that once it breaks above there, you can continue with your buy. Now, when you're trading oil, we're seeing oil between 64 to 67. Now, this is a very, very reactive instrument. So yes, we're still expecting to see oil prices move a bit up. However, like Relia said, you also want to make sure that you have a good account size to make sure that irrespective of the pullbacks, the reaction to demand and supply, you are able to survive it. And of course, the Euro USD has been relatively weak. So definitely we're going to be looking for more buys on the Euro, except if, the Thursday data gives a much more stronger dollar. And of course, for the indices, more buys. But like we said, we're looking at where prices have been supported by, where they've been hovering for a while, because definitely if you're not a type that enjoys consolidation, you do not want to be on the market. And the USD JPY, nothing is really happening here. I mean, it's just been the dollar.
Yeah, so, it's been the dollar.
Yeah, exactly. It's just a dollar right here, guys. So when the news is being released, if we see a weaker dollar, of course, we continue with the sales on JPY.
All right, thank you very much for that, Natasha. So here's the game plan. With lower liquidity ahead of Friday holiday, that market may not be moving so much on Friday, so all attention is on Thursday.
Sure.
Yeah, all attention is on Thursday. So you need to stay razor focused, stay calculated, avoid chasing the noise. If you're already in your trade, protect your profits, or if you're in your drawdown, try to manage your risk properly. And if you're waiting for a clean entry, this could be very well your week to strike.
And remember, guys, summer trading means volume can drop fast and big moves can happen in thin market. I mean, did you see the JPY today? So yes, guys, this week is a true test of discipline, not just your setups. So trade with your head, not your emotions.
Yes, trade with your head, not your emotions, guys. All right, fam. So thank you very much. So this actually wraps this particular episode. We'll be right back after the NFP release to break it all down. In the next episode, we touch a little highlights what happened. Right. So until then, stay sharp, guys. Remember to like this particular episode.
Yes.
Subscribe to the channel if you're watching for the very first time.
Yes.
If you've been with us for a while and you haven't subscribed, come on, what is happening? Right? Subscribe to the channel. You're not paying ₦5 or $5 for this. So
yes, guys. So until then, trade smart,
stay sharp,
and keep your ears on Market on Mic, guys.
Yes. So see you in the market. Bye.